That's Scott Bauer, CEO of Prosper Trading Academy. Scott, thanks so much for joining the show.
Good morning, Caroline.
All right, so Scott, I want to ask you about this tick higher that we're seeing in oil prices this morning, up about almost 3% right now, trading around $71 a barrel, a little bit more than that. A few potential catalysts. What is it that you think is driving prices higher right now?
Yeah, it's just a matter that OPEC came out and said they were going to delay what those plans that they had in place. So the market is reacting accordingly. I think this is more the fundamental moves that we're seeing in crude as opposed to the risk on or risk off due to geopolitical events. So I do absolutely think that crude is still in a sell the rally instead of a buy the dip. And the reason I say that is because fundamentally, if you remove out, the geopolitical risks that are out there, there's an oversupply and the lack of demand. So when you look at that and you look at the basic principles of economics here, the pressure is to the downside. Now, we know the wild card is geopolitical risks, and that can heighten up at any time. But if you look at the pure fundamentals of what crude is doing right now, it really all comes down to supply and demand.
Okay, but also there was this Wall Street Journal report that Iran is planning a strong and complex attack on Israel in response to Israel's airstrikes. So obviously are question marks about what strong and complex could mean. But what could that potentially mean for oil prices, supply and demand aside?
Let's say if something, does happen, and we all hope that it doesn't, there's probably 10% is pretty much where that risk has been trading over the last, let's call it 9 to 12 months of, geopolitical risk. So I think we could, if something, catastrophic or something really impactful happened, I really think that we could probably see oil back in the upper 70s or so. But again, I would be selling any rip and not buying any dip.
Okay, so we're talking about the potential upside given geopolitical uncertainty. But if this is a sell the rally versus buy the dip sort of market for oil, where do you see it going to the downside from here?
Well, 65, 66 has been a pretty critical support level. I don't think that we get much lower than that because of the geopolitical risks. Now, if we get into, a month, 2 months from now, we're December and we're in the same situation we are right now, and there hasn't been an increase in geopolitical risk, we could be below 65 because we're at the least demand part of the year, not just here, but globally as well. And quite frankly, we know how the price of crude really reacts to what's going on in China. And there is just, to me, there is no optimism whatsoever as to how they are going to have an uptick in their economy and increase their demand.
Okay. All right. Let's move on to gold. It's not doing a whole lot this morning, pretty sluggish, but still near all-time highs. Do you look at that as a safety trade or something different, Scott?
I do think at this point it's a safety trade. For the last 9 months, 12 months or so, we know central banks have just been buying up, records amount of gold. At this point, though, coming into the election, coming into the end of the year here, I do think that we've stabilized a bit because it is more of a safety trade. But I would expect that we do continue to climb back up to 3,000, regardless of who wins the election. Going into the end of the year and into the first quarter, that has been the momentum. And unlike crude, where it's a sell the rip, buy the dip, gold has absolutely been in place to buy the dip and not sell the rip.
Okay. All right. And we're also keeping an eye on the dollar. Dollar essentially a little bit lower right now, but we've seen this pop in the dollar at the same time that we've seen this tick higher in the 10-year yield, despite the fact that the Fed is in this rate cutting cycle. Help us make sense of that, and how big of a market overhang could that be?
Sure. You look at it and say, okay, the Fed's cutting rates, whether it's 50, 25, how quickly it is. Why is the dollar rallying? The dollar is rallying because other central banks around the world are still a lot more aggressive than we are right here. So when you compare the dollar to the yen, to the euro, to the pound, whatever it might be, other central banks are cutting quicker. They're not just cutting quicker; they're cutting, by bigger amounts. So that is why, we have seen the dollar really hang in there. This has been a huge rally in a very short time, just off of that 100 level to, pretty much 104. And I know we're a tick or so below that right now. But I think it is more so due to what is happening with other currencies and other central banks than anything else.
All right, Scott Bauer, CEO of Prosper Trading Academy. Thanks for breaking it all down for us.